Hello, welcome back to the Sovren FX YouTube channel. So today we're going to go over GJ and gold. So currently in the economic calendar, we're expecting quite an eventful New York session. We have the Canada unemployment change and employment rate and the infamous NFP for the United States dollar. So today we are going to base our trades based on how this labor market economic data release is going to come out. That's how we are going to plan our trade around that. So let me quickly give you my analysis or what I expect, because I'm actually not a wizard or anything, but yesterday our analysis were on point, where we executed some sales below 1912 that gave us around 80 pips. So for today we are going to look at some sales still. So this is what you expect on gold. After the data release, a liquidity grab, then a drop. So if the data is one-sided and it complements the data yesterday, which was the labor market for the private sector, so in the event NFP complements that, I'm expecting gold to go and break the 1902s all the way to the 1870s. So this is the one setup we're looking at, a liquidity grab. If we fail to get a liquidity grab, I'll be looking for a break below 1912 once again. So we're expecting price to move all the way towards 1897. So this is what I'm expecting if the data today is aligned with what happened yesterday. But if we have mixed sentiment and fail to get one-sided volatility, I'm probably going to sit this day out and maybe execute on GJ. So on GJ, we in fact had buys in the private group for 100 pips. We took a short position at 182 flat. So we had long positions at 182 for 100 pips. This is the trade that we took with the members. It's been running since London. Okay, so let that be. As usual, GJ doing what GJ does best, gives you pullbacks, then creates highs. And also, depending on the data today, since the US dollar is the global reserve currency, you're expecting that economic data release to bring the waves across towards all currencies and equities, the global equity market. So I'm still playing GJ buys. Here's my path. So immediately the NFP data is released, I'm expecting a sharp liquidity grab as we go towards and break 184. So this is the first scenario, or an impulsive break above 183.200 towards 184. Yeah, so this is what I'm looking at today. If the data comes out not the way we expect, we are going to adapt and maybe get sell scalps, and the only place I'm seeing sell scalps is below 182,500 short-term sell scalps for around 20 to 30 pips, close out, then call it a day. So that's the analysis for today basically. So if you have any questions, you can leave it in the chat. Okay. So I can quickly go over what I just said for those who didn't get me at first, or maybe you're just joining the stream. So the US labor market data is in focus to close off the week. The reason why it is in spotlight, it's due to the signals it gives towards the Federal Reserve monetary policy. So the Feds have been pushing the narrative that they're going to keep the rates up for higher. They're going to keep the rates higher for longer, with the labor market being hot as a major support for it. But stock markets are not taking it and continuing to remain elevated. This is because of human greed. Basically, they don't want to let go of their gains. As you can see, by US 30, price created the highs at around 34,500, and the investors don't want to lose all these gains, so they're just being stubborn. So they're still hoping for future rate cuts, but that is not yet seen, and we are still expecting the data from NFP, which is going to be signals towards the Federal Reserve monetary policy. So if NFP comes out poor, I mean way below what is expected, the US market will be focusing on pricing in interest rate cuts, which will be before the year ends, and therefore we are going to lead to US dollar bears, equity bulls, and gold bulls short term. Okay, but if the labor market data comes out, so the labor market data is just NFP, if it comes out hot and optimistic, we'll have the market focusing and pricing in interest rates being up higher for longer and lead to the US dollar bulls, equity bears, and gold short term. And as a mirror of yesterday's data release, ADP was way optimistic. That is the labor market data for the private sector. So expecting, personally, that is, I'm expecting that to be reflected today during NFP. And due to the volatility induced during NFP, I'm expecting a liquidity grab towards 1923 to 1929,500, then followed by a drop all the way to 1897. Okay, so that's basically it. Nothing more to add, nothing less. So I'm looking forward to any questions you might have. So the data will be out in approximately 45 minutes. So till then, we just have to be patient, exert a little bit more patience, and wait for price to set up. So in the event the data is opposite to what we expect, I'll only look for buys above 1939, 1940 areas. So if price shoots up, closes above, you could wait for the next 4-hour candle to give you a bottom wick, tap this previous key level at 1929,500, then execute buys to end off the week. So we've only traded 2 days this week and we are up 80 pips. So this is the journal. So this is only the journal for this week, and we started from Wednesday. But we had a delightful June. We caught a lot of pips. As you can see, my win rate is 50%, but focusing on tying my fundamentals along with technicals, I'm able to be way profitable than traders with a negative risk to reward. For example, people take their profit at 10 pips, having 30 pips stop loss. So as long as you have fundamentals aligning with your technicals and have a positive risk to reward, the win rate wouldn't matter a lot, because this is 80 pips. If you had one lot on this 80 pips, that's $800. I'm also working on pip counts for the trades we take in the private channel, but this is still a work in progress. It will be out before next week, Monday. So right now we're just sitting this out and letting gold do what it does best. As a rule of thumb, we don't want to enter trades in the middle of a range, because gold, as you know it, is volatile and will most likely play around this area. And you'll most likely get stopped out before you see the move. So it's best to sit it out, let price give you the setups along key levels, then execute accordingly. So this is a 250 pip move, and that's why you have to exert a little bit more patience. No need to rush anything. So if you have any questions or any pair you might want us to look at, I'm more than delighted to answer or give you an analysis based on what I understand. Don't forget to leave a like and subscribe. You can also share the live stream to help this knowledge get to more people. as we are waiting for price to set up, we could maybe go over so since there are no questions, I'm most probably just going to talk about any topic that comes to mind as we're waiting for price to set up. So let's talk about trade entries. Trade entries and anticipation and validation. So at the end of the day, the markets are all speculation, so your experience and knowledge on top of your confidence is what's really going to help you anticipate and follow through with better entries. Of course, you'll always be following your pre-planned analysis and trade ideas. And that's why I just don't wake up and enter a trade. I'll pre-plan the trade a night before, then wait for price to come towards my area of interest, look for the candle signals for entries at the lower time frame. I execute on the 1 minute. And if the candle signals point towards the trade that I had planned for, I'll execute without hesitation. So taking effective entries is one of the most difficult parts of trading for a retail trader. It's all about effective anticipation. So I didn't know I'd go in this much, so you could maybe take notes. So I think when taking entries, these are the 3 things you're going to look at. Have your trading system, risk management, stock trading plan, and the pre-planned analysis. Trade ideas. Okay, so let's break this down. So with the trading system, this refers to the rules and a guide on how you do market analysis to potentially spot an opportunity for a trade. So this has to be static in its core with improvements from your experience gained. Okay, so for me personally, I use a combination of fundamentals and technicals to give me my market analysis. So that is my trading system. I put together fundamentals and technicals. So make sure your trading system is static and that it doesn't change based on what you see on social media. So on social media, you're going to see a lot of trading systems. Just come up with one, then stick to it all through and through, and improve it with the experience you gain over time. Remember, it's a long-term game and not need to be short-sighted. So let's move on to risk management. So predetermined understanding of the risk versus reward is on a particular trade prior to the entry allows for less emotional attachment and better control of capital. I'm not sure how many of you have been in a trade, then all of a sudden price moves against you, your heart skips a bit and you close the trade, only for the trade to go towards your take profit. Then you sit there regretting. It's all because you don't have risk management and good trading plan. So making sure you have, say, a positive risk to reward, and understanding that you have predetermined risk. Say $50, you're putting $50 on the table to get $150. If you place your stop loss and take profit, you can close out your charts and take a walk. Make sure, or if you're going to look at the charts, you just sit on your hands and let the trade play through. That's an important part of your trading journey because it's all in the discipline. If you realize you're entering 10 trades a day, that's because you lack the discipline. So your trading plan allows you to control your capital and how you're looking to attack the goals you're trying to achieve in the market. It also ties in with your trading system, which you will need in terms of risk management, as well as even potentially looking to execute on a trade. Okay, so that's risk management. So me personally, I use a 1 to 3 plus risk to reward because it's way easier on my psyche, because psychologically, for those traders who do a 1-to-1 and have a win rate of around 80%, you are always having the pressure to win your next trade. And if you're on a win streak, then incur a loss, it's going to mentally destroy you. So it's better to have a 1 to 3 plus risk to reward, a 1 to 2 minimum, whereby you can have 5 out of 10 trades, you can lose 5, win 5, and still be profitable. Okay, so that's that with risk management. So let's go on to pre-planned analysis and trade ideas. So you must have trade ideas you're looking to execute on using the above 2 factors prior to taking any entry. The anticipation is bringing together the skill set, risk management, and market speculation to patiently wait to execute at a planned price point of interest, which is the key level on gold. And in GJ, we have the psychological price. This is where you can find them as an indicator on TradingView. So once price comes to a planned price point of interest, if it confirms via trading system and analysis to line up, you execute. Okay, so I think I've gone over sorry about that, I didn't realize what happened to the stream. So it was a technical issue. I'm not sure if you've heard exactly what I was saying. I had a little bit of technical interference. So I went over these 3 parts of trading. I'll later go over the audio to see if it captured what I said, but if you didn't hear, you can just let me know in the chat. I can go over these 3 parts once again.
Somehow I woke up out in Beverly, fucked up, smelling like that bourbon, and I end up alone. I'm not certain. Yeah, the girls impolite in the club every night. That's how it goes when you Hollywood perfect. Hollywood perfect. That's how it goes when you Hollywood perfect.
So let's quickly go over the risk management, trading plan, and pre-planned analysis stroke trade ideas. I realized the stream was interrupted by the starting stream. Okay, so quickly, risk management just refers to predetermined understanding of risk versus reward on a potential trade prior to entry, allowing for less emotional attachment and better control of capital. Your trading plan is just the control of your capital and how you're looking to attack the goals you're trying to achieve in the market. Remember, it is always going to be a long-term thing and not just short-term. Therefore, this ties to your trading system and what you will need in terms of risk management, as well as to even potentially be looking to execute on a trade. Just before the stream was interrupted, we were talking about, for example, you're in a trade, then all of a sudden price goes immediately goes against you. You close the trade, then thereafter it drops towards or rises towards your take profit. That's simply because you lack a predetermined risk and a valid risk management plan. So on pre-planned analysis and trade ideas, you must have trade ideas you're looking to execute on using the above two factors prior to taking an entry. So the anticipation is bringing together the skill set, risk management, and market speculation to patiently wait to execute at a planned price point of interest. So the planned price points of interest on gold are my key levels. On GJ, I have the PPLs, which are psychological price levels. If you backtest this, you'll realize how beautiful price bounces from these areas. As you can see, 182,800, price tapped that on the dot, then went up. So that's it on price points of interest. So you just have to patiently wait and execute at your price points of interest if the confirms via your trading system and analysis line up. Okay, any questions, you can leave it in the comment section. So trade anticipation can only be used with effective understanding of what you are trading and why, knowledge of the trading instrument, how to do analysis, understanding of your trading style of choice, and so forth. The market is all speculation. So if you don't know how to speculate, you cannot find trade opportunities. So as you have seen during the start of the stream, you can call this a speculation because I'm expecting good NFP figures. Therefore, just a liquidity grab towards 1923 or 1929 500 before we see a sharp drop towards the 1897 key level. So that's speculation. So trade entries aren't just a singular dependent confirm, such as double bottom formed or triple bottom, or the candle arrangements, the dojis, three white soldiers, and so forth. So it's a combination of concepts such as understanding the trading bias, having information advantage, which is the fundamentals, understanding what side of the market to play and why, the observation of market structure and the price points of interest, the key levels and the PPLs, the price psychological levels, then the pre-planned trade ideas based on all of these concepts, the development of experience, and finally your anticipation of trusting and depending your analysis, experience, and understanding, plus risk management. So in summary, there's no holy grail method to trading and trade entries. Trading entries comes from very strong experience speculation, then anticipation of your speculation, which is from a development of knowledge, experience, and skill set. You must also remove emotions by focusing on risk management and probabilities. Any questions so far, you can leave it in the chat. So you're going to have the NFP figures in the next 20 minutes, 22 minutes. Then you're going to plan our trades based on the data we are going to get. So let's just sit tight and execute according to our speculation and trading plan and the pre-planned analysis. So always have the patience to wait for ideas. The more accurate your analysis and trade ideas become, the more the trust you have in your knowledge, the more trust you have in your trading system and experience, the more confidence grows to enter based on anticipation of your trade ideas. Executing the trades based on anticipation and experience, it goes back into developing more of your chart and market hours. Therefore, you have to put in the time to put in your market hours just as other fields, because trading is no different than any field. You have to put in your 10,000 hours to become a master of any skill. So this gives you more information to learn from, seeing what you're doing right and what you're doing wrong. If you have any questions, any pair you want us to analyze for you, apart from the ones we talk about daily, the gold and GJ. So NFP calls say good. This means it's greater than the forecast. We're going to have USD golds, gold pairs, and US30 bears. And the opposite is also true. So in the next 15 minutes, you're going to see what's going on. So we can go over candle bodies and wicks before we get our entries in the next 15 minutes. So let me just so hope you've written this down somewhere and made some notes, and it was helpful. So if you are a scalper or an intraday trader, your higher time frame is the 4-hour candle. So for you to start analyzing the 4-hour candle as a scalper or an intraday trader, you want a 4-hour candle to close below a strong, say, non-resistance level. You'll find opportunities for a scalp sell or an intraday sell down the range. This is the same for buys as well. So don't confuse the key levels with resistance and support. Okay, so when trading, let's use a clear gold chart. So as you can see, higher time frame gold is on a bearish point of market structure. I don't know how you can do it, whether you use trend lines EMAs or channels, whatever gives you direction of price. So right now on an intraday time frame, gold is in sells. I mean, on a higher time frame, gold is in sells. So for you to even think about getting into more sells, say before the New York session, while doing your pre-planned analysis, you want to see the reactions here at such levels. So just mark out your levels and you can play them range to range. As we did in June, we capitalized on this nice range. We used to buy here, sell here, buy, sell, buy. It's just a matter of understanding what part of market structure price is in. So right now, we've already declared that price is in a downtrend. So we drop down to the hourly. So this is just analysis for an intraday trader or a scalper. So you want to understand that when price comes to tap your trend line and it aligns with levels, areas of interest such as this, price sensitivity areas, you can get your sales from 1924. And the reason I'm saying area, because resistance and support aren't a particular price, therefore you can get your sales here. And for you to get cleaner entries, this is where the key levels come in. You jump onto your chart with your key levels and look for the key level closer to 1924, and which is that it's 1923.500. As you can see, exactly on point where we're expecting price to do a liquidity grab, then drop down. So we're still on the hourly, and because the hourly you can rarely catch a sniper trade and execute on it, I drop down to the, you can just go step by step, the 30 minutes, slowly go down time frame by time frame, then the 1 minute finally, where it gives you the most information. So the lower time frames have less historical value compared to the higher time frame, so you can't trust them as much. It's just common sense. You can't trust a 15-minute zone created by 30 15-minute candles compared to a monthly zone or a daily zone formed by 4-hour candles. So you can use the 1 minute at very key areas of interest, whether you want to swing, scalp, or intraday trade, because every candle is 60 seconds worth of price action, and this will give you the most information of price action in a certain period of time. So you don't have to wait for a 15-minute candle or a 30-minute candle close to see a rejection at your area of interest, or at your higher time frame strong support or resistance levels. Okay, you can start seeing rejections at the lower time frames, such as the 1 minute, which is where I see my rejections. If you realize price is doing this is a double top, or whatever you want to call it, an M pattern. This just shows me that buyers are losing strength and liquidating their positions, as sellers are jumping into the market and providing liquidity and order flow. So that's just a little review of how you can do your analysis technically. Okay, so everything is putting together technical and fundamentals. So we'll go over fundamentals a little bit later, because right now price is about to give us the move in the next 9 minutes. We need our eyes glued to the charts. So we're just waiting for, if we get good NFP data, we're waiting for a liquidity grab. So what is a liquidity grab, you might ask? So this typically happen with news or economic data reports. These are done by institutions such as hedge funds and banks. So they usually take out the retailers in the process, which is us, the retail trader, grab a bunch of orders, and then there's a quick snapback in price. And this snapback is quite aggressive, as you're going to see in the next 8 minutes. So just before NFP is released, you can monitor investor behavior. You can realize the greed in the markets because price has already started moving down 8 minutes, 7 minutes before the actual release. So that is just human nature. So that's just the price levels I'm currently looking at for entries. So remember, there are 3 ways you can execute on a data release. You can do it with the aggressive volume with the price closes below key levels. The second one is to wait for the new 4-hour candle to give you a pullback, then enter. And the third is to wait for the daily candle to close and wait for the next one to give you a top wick, which is also a pullback, then execute with the trend, which will either be bullish or bearish depending on the daily or 4-hour candle closes. So right now you realize price is going to lag, hang. If you look at your brokers, the spreads are probably widening. as this is a report everyone across the world is waiting for, because it affects the dollar, which is the global reserve currency. Also, a rule of thumb while trading, for those who are going to enter, like me, the aggressive entries, always be quick to close to manage your trade. If you get your 30, 60 pips, close out. Don't be greedy. Don't expect price to drive the whole 250 pips in just 5 minutes, okay? So if it drives 30, close by 50% of your trade, move your stop loss to break even. If it drives, well and good. If it doesn't, well, you got your 30 pips and call it a day. So the release is in the next 2 minutes. So don't enter the trade right now. Wait, be patient. So 1915 isn't even a key level, so don't look to execute there. We're literally in the middle of a range. In the next 20 seconds, six, 5, 4. So there's the liquidity grab. So it was below the forecast, but I don't think it's really bad data. So let us just wait and see how investors are going to interpret this.
You gotta know I'm all yours. But when I say what's that about, you start slurring your words. Tell me why you have to seem so distant when I'm holding you. Your fingertips are drifting away, and I fucking love how it hurts. Why do I, baby, why do I love the way you always leave me? Why do I, baby, why do I love the touch but never love the feeling? Why do I, baby, why do I love the way you always leave me? Why do I, baby, why do I love the touch but never love the feeling? Why do I, baby, why do I? Why do I, baby, why do I? Why do I, baby, why do I love the touch but never love the feeling?
The data actually came out really mixed, and we're probably going to have a messy Friday. The NFP came lower than forecast but still in healthy ranges. The private payrolls data yesterday is bad, but ADP was very strong. So expecting less impact overall and mixed sentiment for a messier Friday. So I'm probably not going to trade and call it a week. So since we didn't get the trades that we're expecting, we're not going to chase trades. So before I leave, if you have any questions, you can leave it in the chat. So there's absolutely no reason for gold to shoot all the way up towards 1940. So this is short-term bulls. This is what I'm going to look at after the stream. Price might come stall out around here, then continue with its move down. But till I see that, I'm not going to enter any trade. So my sales would be around 1923,500. Might take profit at 1912. And around 15 pips stop loss due to the volume. So I just have to wait to see this. You can also wait for this. Look at your charts. But currently, I'm not in any trade. This is a 100 pip trade. So depending on how this 4 hour will close also, we are going to read the sentiment through that. So I think here's the move. In the event you're in a trade right here, how would you manage this trade? So currently up 15 pips. I'd have my stop loss at break even, then wait for price to drive. If it stops me out, well and good. Just wait for the next 4 hour candle, then you can get your entries. If you missed the entries at 23,500, don't enter right now. So to validate the sales, you don't want to see price closing above 1923,500. So you can expect a 50% correction of this move. So I think it's about time. So that's a 30 pip trade. You can close there and call it a day. 30 pip scalp. So the next take profit would be at 60 pips. For those who close percentages of their positions, but for the scalpers, you're already done at 30 pips. So this would be the second, then let the rest do what it wants to do towards 100 pips. So I think this has been a good session, very informative. If you go back in the beginning as we were doing our analysis, we were sure that price was going to pull all the way to 1923 and 1929,500, and that's why I said for any buys, I'd only wait for price to close above 1940-45 areas for me to even think about buying. But yeah, that is that. If it comes back to 1923,500, it will probably stop you out at break even. And yeah, call it a day, because I'm sure price action is going to be messy, because we have the mixed data. Price came out worse than forecast, but not that worse. You know, there are levels of it could have been much worse. That's what I'm trying to say. So you're not yet stopped out.
You think I would look pretty on your arm once you cover up my bruises and battle scars, but it always ends the same. Can't bear the things I've had to face. Got you crying on your knees in pain. Oh, some things never change, never change. You'll break your back to make me feel again. Suffocate to make me breathe again. Lose your mind from endless pain. Some things never change, never change. Redemption never came. I stopped asking for forgiveness, cause you should know only fools tread where the angels fear to go, but you keep trying to get too close.
So overall, from a data perspective, it's hard to deny that the labor market is not healthy and tight still as expected. Jobless claims and the JOLTS job openings in regular historical healthy ranges. NFP it's still above 200k. The ADP, the private payroll, 500k plus report. The unemployment rate declining and supports what Feds have been pushing in the last week or months, with the rates being up higher for longer. It's just a pain pill for the greedy stock investors and hedge fund managers with capital. Because it's always easier to buy stocks versus sell. But as day traders, we must adapt to the market waves and price correctly, because it's time for a bear market, and a bear market pays big. Because the investors have been fighting the bear market because it doesn't it's easier to buy and not easier to sell, as you can see on the US 30. But if we start the bear market, it's going to be a dive We're going to dive all the way to the 1800s. Don't forget to subscribe. This is around 60 pips. So when it gets to 60 pips, you can close another position for those who are still holding. So price is currently chugging its way up to 1923,500. So in my books, this would have been a nice trade. Also not yet stopped out. But for re-entries, I'd like to see so if we get stopped out here, we already caught the 30 pips earlier. So for more entries, I'd like to see price, if it breaks above, fails to break above 1925 and comes below 1923,500 to validate more sales towards 1912. And for that to happen, you have to wait for the next 4-hour candle to come up in 6 minutes. So just be patient for those who missed the first trade. Also, in the event you don't get the trade, no need to worry. We have 6 months to the year to catch trades, so no need to be in a rush. So not yet stopped out. So let us look at the 4-hour. So it also depends. If the 4-hour candle closes above 1923,500, I'm not looking to take any more sales, but rather wait for Monday for better setups. Also, don't forget to adjust. This is the first week of the third quarter, therefore price still has rebalancing moves to do before we get the drive down. But you can mark this live stream, and before next week ends, we're probably going to touch the 1800s. So you can count on this 4-hour to close below, then the next one to drive down. So you aren't technically stopped out, but depending on your broker, the spreads, and where you executed, you might be out. So I think this is the new 4-hour candle giving us the volume. So the only reason I didn't take the sales here personally, but for those who took, well and good. I expected this to tap me. I had a sell limit at 1929,500. I expected this to come tap me in, then drop, but it wasn't able. Therefore, me personally, I'd wait for in the next 2 minutes to get another trade.
break, there's just more pain to burn. They'll never, never, never learn. Till the battle's won, till kingdom come. Best to give me your loyalty, 'cause I'm taking the world, you'll see. They'll be calling me, they'll be calling me royalty. Best to give me your loyalty, 'cause I'm taking the world, you'll see. They'll be calling me, they'll be calling me royalty.
So we have the new 4-hour candle. I'd probably wait for it to give me a top wick, then drive down rather than execute immediately as it drops. So I'll just give it time to give me a top wick, then drop down. So turns out I'm not going to get a trade, and those who got in at 1923 at this retest also nice. Oh, so we were looking at gold for so much I forgot that I gave out the analysis for GJ. So exactly where I said it would tap before it flips as the liquidity grabs, goes down and up. So those who actually took this trade, nice. 60 pips up currently. So sometimes you find out you're fixated with one pair and forget the analysis you had on the other. So yeah, this was a good trade. Exactly where we had planned for. So volume is dying down. I might end the stream right now. It's been a good week, even though we traded only 3 days. So total for, if we sum up the 60 pips here and the 60 pips for GJ, because GJ did exactly what we said it would do. 182, 500, then shot up all the way to 183. 60 pips each. So that is 120 pips plus 80. So we are 200 pips in for the week. So if you have any questions, leave it in the chat before I leave. I'll be leaving in the next 3 minutes. So if no questions, I'm going to end the stream right now. Thank you for tuning in. See you Monday, same place, same time, New York session.